Hi everyone, my name is Simon Mishevich from Optimized Accountants, and in this video I want to talk about the new 5% stamp duty on residential properties, but how you can legally avoid that. Now, as we go through this, you might be deciding, hey, I've had enough of the United Kingdom, it's time to move somewhere else. If that's the case, you need to know about expat taxes, moving from the UK to another country, and we got you covered on that channel on the left. You're watching the UK property tax channel in the middle, but if you're like me, wanting to move further afield, then moving to Spain may be right for you. And you can follow the journey of myself and Louise, as we've covered that journey already. So why not learn from our mistakes and our good learning points as well. So if you're looking for a free property tax guide, then you can download that for free using the QR code showing on your screen. That's updated from the last autumn budget from the Labour Party. So let's have a look at residential property and stamp duty rates that you will need to pay. So the first one is the banded rate, and that can go from the 0% all the way up to 15% depending on the type of property and vehicle that you're using to purchase that property. Then you've got this new 5%, it used to be 3%, now it is 5%, and that is for any residential property above 40,000, which, let's be fair, is most. And then if you're a foreign investor, you'll also have to pay the 2% foreign surcharge as well. Use that QR code if you're looking for any UK, US or international tax planning guides. So this is how to avoid stamp duty, the 5% rate, and doing it legally. So the first one is buy commercial property. You may have had enough of residential property investments and choose to buy commercial property instead. Depending on where you are based, you may actually get a better return on investment. Stamp duty is going to be applied to non-residential rates, which is an incredible saving compared to residential property. You do not need to pay the 5% rate whenever you're buying non-residential, or as they call it, commercial property. Next, we've got commercial property, which you can buy and then convert that to residential property. It is a strategy that a number of clients that we manage are doing. They are buying office blocks or other types of warehouses and then converting that to residential property, which they are able to not just save on the stamp duty, but they're also able to save on the VAT as well by converting it from non-residential property into residential use. Third thing is to buy uninhabitable properties. You know, those type of properties that are boarded up. It's likely that that property is uninhabitable, and as such, it will charge at non-residential rates. Again, the 5% rate will not be applied to that type of property. And the fourth thing is to buy the company. Rather than buying the residential property itself, why not buy the company that it sets itself in? As an example, you may go to an estate agent and say, I'm looking to buy a residential property investment. Do you have any landlords that are looking to sell their properties inside of a limited company? If you're going to do that, not only will you avoid the 5% stamp duty rates, but you also avoid the residential rates, banded rates for property as well. In fact, you'll pay a much lower tax on buying that company. You do need to do your own due diligence whenever buying a company rather than the asset itself, because you don't know what you're always buying. So make sure you do your due diligence whilst going through that process. But these are all 4 legal ways in which you can avoid the 5% stamp duty tax.